by way of presentation. I am a visual learner and I like to see things in words. And so maybe there's someone out there like me who does better than having someone speaking in their ear. So hopefully I can answer some questions that come up frequently regarding the refinancing process, or how to get started, or what will be needed, what it is and what it is not. So hopefully I can answer your questions. My contact information will be at the end of this presentation, the end of this video, and feel free to reach out to me anytime. I am available to working people, so I'm available after hours and on weekends as well. So please enjoy, and if you have any questions, let me know. Okay. Again, one of the things I'm going to share is just some frequently asked questions regarding the refinancing process and what it is. And one of the things we like to do with research participants and patients is we like to go through a process called informed consent. And rather than this being a document that we hand to the patient and just have them sign, we're required to go through each section of the consent form and make sure that they understand exactly what they're getting into before they agree to participate. And rather than it just being just a document, we call it the informed consent process, because it's up to us as the recruiter or enrollment specialist to make sure that the patient is fully aware of the risks and the benefits, exactly what they have to do, and just some of the nuances of being in a research study. And so I say all that to say this. With refinancing, I want to make sure that you have at least enough information to help you make an informed decision of whether or not you should contact someone to go through the refinancing process. Again, this is just general information. Obviously, it's not going to be specific to your circumstances or your specific personal situation. It's just an opportunity to kind of give you an overview of some of the things that a mortgage loan officer may be asking you for, and some of the things we consider and a lender would consider with regards to approving you for a refinance. Okay, so hopefully by the end of this video, you'll be able to have your basic questions answered, and you can always reach out to me if you have more questions. If you are interested in refinancing and you are in Michigan, I am licensed in Michigan, so you can reach me by way of the contact information at the end of this video. So what are some reasons to refinance? Typically, there's three, or a combination thereof, one being to take cash out. And I'm going to discuss a little bit more about where the source of that cash comes from, but typically someone might have an option to take cash out through refinancing to maybe have a lump sum of cash to take care of credit card consolidations, or maybe a home improvement or something like that. So someone might refinance to take cash out to get a lower payment. That's always an option. And then also to shorten the length of your mortgage. Most people take out a mortgage for 30 years. There are also some who take out for less than that. And so you'd have the opportunity to decide whether or not you want to extend your mortgage or even shorten your mortgage. So is a refinance and a second mortgage the same thing? So if you're like me, or maybe you're not like me, before I coming into this industry, I thought a second mortgage was a refinance. So whenever someone said refinance, I'm thinking I don't want an additional loan to pay out every month. And so the answer to this question is no. So a refinance is replacing your primary loan with a new loan with new terms. And these new terms can be made up of a different interest rate, which right now, hopefully, if you would qualify, you might be able to get a lower interest rate because the interest rates are really low right now. A term. The term is the length of time that you're taking to pay back your loan. So if you have a 30-year term, maybe you want to refinance it to shorten that term, and again, get maybe a better interest rate, and to maybe 15 years or 20 years. And then new terms could be included in the amount. So new terms could also be the amount that you're refinancing. Obviously, you can't go lower than what you already owe, but you might want to refinance for a higher amount so that maybe you can pay off again some additional debt that you might have. A lot of people use that additional source of cash to pay off credit cards, and I recommend shredding those cards so that you don't get back in the same predicament. So those are that is the definition of what a refinance is. With a second mortgage, you're actually borrowing a lump sum of cash against the equity in your home. So your home becomes collateral a second time for the loan. So it's already collateral for the first loan that you're paying on your primary mortgage, but the secondary mortgage is typically linked to an additional amount that you received as a result of your equity. For an example, home equity line of credit. I'm sure you've heard that. It's also called a HELOC. That is a source of credit that is linked to your equity in your home and using your home as collateral. So second mortgage and refinance, no, they are not the same thing. So what is equity, since we're talking about equity? Equity is actually the current value of your home minus the amount that you owe on your home. So say your home is worth $120,000, right? And you owe $90,000 on your home. That means that you would have $30,000 worth of equity available in your home. Which is a great thing, right? So the source of funds for a cash out refinance or a refinance where you're taking cash out and a second mortgage, which is an additional loan on your home, the source of those funds is the equity. If you don't have equity, you wouldn't have a source of funds for a cash out or a second mortgage. And I'm sure you've heard of negative equity. That is was a huge term in 2008 when the housing market crashed. And this is when many people were losing their homes. Many were losing their homes, for one, because they were underwater and they couldn't afford the payments. They couldn't refinance because the amount of money that they owed on their home was more than what the home was appraising for. So let's flip what I just mentioned before. So maybe their home was worth $90,000 and the amount that they owed on the home was $120,000. And you can see how that could be a huge problem. So they would actually be a negative $30,000 in equity, and that's a negative equity. You also see, like, a lot of people think that maybe auto loans or having an automobile where you have an auto loan on is an asset, when actually it's not an asset because there's no value typically built into that auto. You know, obviously there's some exceptions with the very expensive and classic cars, but typically when you leave off the car lot purchasing a new car with an auto loan, the car has already depreciated, right? Especially with auto loans with high interest rates. And so an auto loan would not necessarily be considered an asset. It would actually be a liability. Okay. So what will be considered when you're thinking about a refinance and you're reaching out to a mortgage loan officer? We want to make sure that it makes sense to even move forward in the application process. I mean, obviously you don't want to apply for credit when you could avoid that, maybe wait a little bit longer or something like that. So some of the things that we look at or we like to obtain information about is your credit score. What do you think your credit score is right now? I think I had a conversation yesterday with someone and I suggested that they pull their credit report. It'll be, you know, on their own. There's no hits to their credit if they do it on their own, to kind of see where they are and make sure that everything is still in good standing. And then also if they could get access to their credit score, they might have, sometimes you have to pay a little fee to get your actual credit score so that they'll have an idea of where they are before they speak to a mortgage mortgage loan officer. Then also, if it, we want to know the monthly mortgage payments, and typically we'll ask for your actual mortgage statement, because your mortgage statement pretty much tells us everything that we need to know about your loan without actually pulling a credit report. And that is, how much your monthly payment is, if you have mortgage insurance that you're paying on the mortgage. It'll also say the actual interest rate that is currently on your mortgage. So those are some of the things that we'll need from you. And then the home value. We typically can have access to that, usually by comparing local homes and what they recently sold for. You could have access to that if you had an appraisal, a recent appraisal. These are some of the things that we get initially from you, just to see if it makes sense to move forward. And we also like to get an idea of what your debt to income ratio is. And this is the amount of money you're spending each month in bills and liabilities, divided by the amount of income that you have coming in, right? So we want to know how much you have coming in versus how much you have going out. Okay, I hope that makes sense. Okay, so what documents will you need when you apply? So in addition to the things we talked about, that's really like the preliminary conversation that we'll have with you, because at the very least we would like to avoid, pulling credit scores and pulling all that. We like to give you general information and make sure that it makes sense to move forward. So when you are ready and you decide that, yeah, I believe that a refinance is a good thing for me and it'll actually benefit me. So the lender is going to need to prove or verify all the information that we are putting in the application. So we like to get that information right from the source, and that is your W-2, and usually that will be 2 most recent W-2s. And then we like to know what your 2 most recent bank statements are. You'd have to give us those as well. And then we will need to know your 2 most recent check stubs. So you'll have to have, at the minimum, these things in order to move forward with the application process. Now, a disclaimer, the lender may ask for longer time periods if something is unclear, or more during the underwriting process. And if you're self-employed, they will ask for the full tax return and profit and loss statements as well. And again, this information that I'm giving you is just like a stepping stone, something to step up on to help you get closer to a decision of whether or not you want to proceed with reaching out to speak with someone regarding a refinance. How long does it typically take? So I would say set your heart on 30 to 45 days. It could take less time and it could take a little bit more time. And some factors that may affect the time that it takes is, one, not having all the information from you. So a lot of our institutions and new companies, we have a way of, we'll be able to send you a link to apply online, and actually you can upload all your information into a secured portal that we all typically have access to at each company. And so it would take about 30 to 45 days if we have all the information that we need from you. And just remember that closing your loan takes the collaboration of appraisers and inspectors and title companies. Okay, so roughly 30 to 45 days is probably an optimal guide to help you, not get anxious and think it's taking too long. It could take less time, but again, these are all generalities. And just know, we like to say this up front, any financial or life changes that occur could lengthen the process. So during this time when you're applying for a refinance, you should avoid applying for new credit, making huge purchases, doing too much with the withdrawals and deposits, because these are all things that the lender is going to need to verify. And if they see something that drives caution, it may lengthen the process, right? So they want to make sure that they have a good grasp of your overall spending habits. They want to make sure that that you're not a risky investment, so to speak, okay? So once you complete the application process, your rate can be locked for 30, 45, or 60 days, right? So once you complete all the information and everything's in and everything has been said, we provided the lender with everything that they need, you're able to lock that rate. And any extensions could be granted, but that would most likely be at your cost. And so you want to avoid, making any hefty decisions or changes, and, moving around. Typically, if you're with a loan company, a lot of people shop around, they have, a little bit. And I just want to, encourage you to, do due diligence before you proceed, so that every time someone pulls your credit report, that is another hit to your credit. And that's considered a hard inquiry. So want to try to avoid those. And hopefully that answers all of your questions. Okay, so what are some costs of a refinance? Okay, so there are some costs that you would have to cover, similar to sometimes when you're purchasing your first home, and that is an application fee. This fee could be due even if the loan is denied. So again, you want to make sure before you proceed that that you have done your research and made sure that all your questions are answered and all the mortgage loan officer's questions are answered, so that proceeding makes sense, right? Appraisal fee. So even though we've done a market analysis and looked at the homes that are close to your vicinity and have sold for a reasonable price for prices, and we compare that with your home value, the lender is going to want a final appraisal, because they want to make sure that the information they have is accurate and updated for your property. An inspection fee. So certain inspections may be required based on the type of loan that you're getting. An attorney review and closing fee. So at closing, there's usually an attorney to review all the documents, make sure everything is up to standards, and they're usually on the behest of the lender. And then the title search and insurance, and this is required to make sure that your home doesn't have any additional liens and that you are the rightful owner, so that someone isn't trying to take out a mortgage or refinance on your home. So this is to protect you as well as to protect the lender. And also for title insurance, and this is usually a one-time cost. So I hope that answered some of your questions. Obviously, I'm sure it didn't answer all of your questions, but my information is here, linked here. And if you have any questions, you can feel free to reach out to me by email. You can also call me at the number listed here. If you feel that you're ready to move forward and you've already shopped around and you think that maybe this might be a good place for you to start your application process, I've also linked on how to apply online as well. So feel free to reach out. I hope you enjoyed this. Video presentation. If you have any questions, I look forward to hearing from you. Talk to you soon. Have a great day.